Hello, my name's Rob Nixon. I'm the CEO of Nixon Advantage, and coming to a town near you is my latest seminar called Accounting Practices Don't Add Up. Why they don't and what to do about it. It's very much a how-to workshop. Full day workshop, 8:30 till 5. A lot of topics covered, and what I want to do today was to talk about one of the key topics that I'll be going to depth with you, into detail, and that's about the growth and the business model of an accounting firm. The traditional accounting firm has a very simple business model, which is people power, number of accountants, multiplied by productive time, or productivity as we might call it, multiplied by average charge rate, less write-offs equals revenue. And of course, less labour costs equals gross profit, less overheads equals profit. That's how the traditional practice works. So what's wrong with this model? Well, it's predicated on volume of people, number one. So to increase revenue, we need to increase people. In actual fact, we can increase revenue without increasing people in the new accounting business model and growth equation. People. We need people to do the work, but do you need more people? I've seen plenty of firms grow by headcount, and they grow by office space, and they definitely grow by revenue, but the profitability doesn't grow. Just the labour costs do. Second part of that is productivity, productive time per person. If you're driving productive time, then you're driving the wrong things. Because if you've got your accounting team at 75% productive, and the measure we use for consistency is a 37.5-hour week, 45 weeks for the year, equals 1687 available hours, how much time was in that? 37.5. You might do, for example, 30 hours, therefore say 75, 80%. To drive productivity means driving more time on the job. And more time on the job is the wrong thing we want to do. Very hard to squeeze more productivity out of your team. But this is often the key driver in an accounting practice. Average charge rate. Well, if you're using charge rates as a method of coming up with the price, you're using the wrong thing. And charge rates typically in the accounting practice are linked to salaries. And typically it's a 3 to 4 to 5 times multiple of the salary cost. I pay you $70,000 divided by 1687 available hours times a factor of 4, there's your charge rate. So what's wrong with that? In a traditional accounting practice, the ones that don't add up, you put your charge rates up, team members say, well, I want a pay increase, vice versa. You put the pay increase up, better put the charge rates up. It doesn't flow through to profitability. This is an insane way to price, but this is the way you do it. You assume that the time to do the job was correct, productive time, and the rate per hour was correct, therefore that's the correct price. Nothing can be further from the truth. And then in this equation you write it off. You get fees charged to WIP and then you write off 10 points. You know, that's insane. Why would you do that? And I know for a fact under this model, because I've asked about 5,000 accountants this question, as you do work for a client, how much time do you put on the clock? And typically the answer is about 85% of the actual work for the client goes on the clock before it's written off by about 10%. Man, 10% write-offs. You're running $1 million firm, that's $100,000 a year. You're running a $3 million firm, that's $300,000 a year. Could be more. That's the price of a luxury car or a small house. You've just torched a car every single year with your write-offs, or a house, or a mansion for some of the larger firms. You would have much more fun if you actually set fire to the house and actually had a slab of beer out the front and enjoyed the bonfire, rather than writing off the way that you do it. Let's stop torching cars and houses. Let's stop writing off. And then you've got the standard model of labour costs, etc. You'll look after that yourself. So people power times productive time times average charge rate less write-offs equals revenue. It's all internally driven. Where's the poor client in all of this? Yeah, you're not focused on the client, it's all internal. So let's have a look at the new model. The new model is all about the clients. We have existing clients. We have acquired clients on top of that. So you have an existing complement of clients right now, and those clients will range in size, of course, and they'll range in quality of client, no doubt. You have acquired clients based on your marketing, referral sources, lead generation and sales skills. That plus that will equal total clients that you have at the end of the period. Clients multiplied by retention rate. So this is a mathematical formula. You don't retain all clients, nor do you want to. But if you focus on retention rate and better customer service and better skills around that area, you'll get more referrals, you get more clients. And then you focus on average project value. So each time they transact with you, how much do they spend? Interesting equation to work out. You've got your total revenue divided by your clients equals the average fee per client, but if you look at the total revenue divided by the total number of invoices that you raise, that will equal the average project value. So a project, FBT analysis is a project, annual compliance is a project, a due diligence is a project, a cash flow is a project, a simple I return, personal return is a project, an audit on the superannuation or KiwiSaver account is a project. It's a project. So let's have a look at the average project value. And you'll be surprised as to how low that is. Typically for most firms, it's going to be around about the $3,000 mark, sometimes lower. And now we get to our third part of our equation. So it's clients, whatever we've got, plus acquired. We've got retention rate. We've got average project value. Now we have the number of projects per year per client. Most firms have about 1.5 to 2 projects per year per client. Because most firms only offer the necessities, the compliance work that we have to do. If you increase the average number of projects from 2 to 3 to 4 with additional services, more interesting services that really help the client. Maybe those services help grow the client's business. And certainly in our coaching program we have methods to help you do this. Maybe the service around profitability or cash flow improvement or asset protection or succession planning. You know, these key areas are what you can offer to your clients. Increase the number of projects. And you focus on the client and you'll grow your revenue exponentially. Of course, less labour costs, less overheads equals your profit. So we focus on the top line, but we need capacity. So the new equation, your standard capacity is all about more people. No, not more people, sometimes less people. Capacity is all about your people structure, different types of people, your processes and policies internally, and your systems as well. So you look at these components and you say, well, how do we get capacity? Well, we get capacity by being more efficient. We price up front, we drive time down, we get efficiency. So many, many methods to do so. We'll be explaining these methods at the seminar. And cash flow. Improving cash flow is very straightforward. High profitability, low work in progress, low debtors, high cash flow. It's pretty straightforward, but most people miss it. They just meander through and put up with the clients. The focus of the new model is about driving revenue from the clients, looking after the clients, making sure they're well looked after, but driving capacity internally about being more efficient, and of course driving cash flow, that's money in your pocket. I'm going to go into detail on this at the seminar coming up. Accounting practices don't add up, what to do about it, and why they don't add up. 20 cities in Australia, 6 cities in New Zealand. I do hope you can make it. Bring your team. The more people you bring, we're going to cover everything from reception through to senior partner. We have a pricing structure in place that the more people you bring, the cheaper it gets per person. We want you to bring your team members. Have a day out. It's a standalone how-to workshop. I'll be covering many, many more topics as well, but that's one of them on the growth and the business model of the accounting firm. I hope to see you in your local city over the next few months.